Good afternoon, everyone. It's Ali, Coram, and Justin Nielsen here with a look at the action in today's session, Monday, November 13th. Justin, what are we going to be focusing on today?
Well, we'll definitely take a look at the markets and also a few stocks, including Shopify, DoorDash, and Lee Auto.
Okay, well, let's get to it. First, let's take a look at the major indexes today. A mixed session. The Dow and the Russell in the green. The Dow up about 0.2%. The Russell up less than 0.1%. On the downside, down fractionally was the S&P 500, down less than 0.1%, and the Nasdaq down about 0.2%. But off the lows today, did have 2 weeks in a row now, Justin, of some very strong gains. So could we now be getting the pause?
Yeah, the pause that we've all been waiting for, right? And look, Thursday it looked like that's what was happening, but then it was followed up on the Nasdaq with a very strong 2% gain on Friday to really cap off a strong week. And look, the Nasdaq Composite wasn't giving up much ground today. I mean, we're still inside day from Friday, down just a couple tenths of a percent. That's really not much. But keep in mind that the Nasdaq Composite is looking a lot different than a lot of the other indexes. I mean, the S&P 500, that's strong too, up above its 50-day moving average line. It's broken its downtrend, but you go to the Dow Jones Industrial Average. That actually got a death cross today. That's where the 50-day moving average line goes below the 200-day moving average line. Now, personally, I don't really like this signal. I think it's too late most of the time, both the death cross and the golden cross, but it's notable that that's something that was happening there. This has still got some work to do, even though it is above both its 50 and 200-day line. But you look at the IWM, which is the Russell 2000 small cap, that came up to its 50-day, got turned away. It's been it's been threatening to take out its lows. So a lot more work needs to be done on that index. And the mid caps are right there with it. And even if you look at RSP, which is the equal weighted S&P 500, that's not looking great either. I mean, it came up to its 50-day moving average line and got turned away. So there's still some damage out there in most stocks. The Nasdaq Composite just really isn't showing it because it's got the heavyweights that are looking great.
Right, exactly. And I know that's been showing up in our stock selection, right? Or our portfolio exposure. If it's going with the indexes, going the ETF route to get some of that exposure, and selectively with some of those mega cap names, which have been outperforming and continue to look really good.
Yeah, and it's almost been, you have to be very careful of the stocks that you need to avoid in this market and not look at the indexes and say, oh, it's going to be okay. There's still a lot of stocks out there that are pretty decimated, and you just have no business really looking at them.
Yeah, so true. Let's take a look at the 10-year Treasury yield, up today, but off highs. So maybe that was helpful when we saw the indexes come off their lows or start to reverse higher, some of them today. Could we tie it to what we saw with the 10-year yield today, up but off highs, just fractionally higher?
Yeah, absolutely. This is something that's very important. And look, I don't think that the importance of the 10-year Treasury yield is going away. There was a lot of kind of back and forth action that was happening last week as Jerome Powell made some comments, and a lot of people are looking at what exactly should we expect for the Fed to do. A lot of people are looking at the possibility of rate cuts, May, June. It keeps on getting pushed around a little bit when those cuts could happen. But the bottom line is the Fed still is pretty insistent and consistent that if the conditions require it, they're still willing to do more tightening.
Let's take a look at some sector ETFs. Here's a look at home builders, XHB, a big week of power. Then we saw it go tight. So this is looking pretty interesting here. And some standouts in the group in this index here or in this ETF look even stronger.
Yeah, Pulte Homes, Toll Brothers, those were a few that we were talking about today on IBD Live. But this is something that is probably going to be very tied to that 10-year Treasury yield. A lot of people are looking at, hey, if we can get some easing in the yields, that could bring a lot more people into the home market in terms of buying, and the home builders, the ones that are poised right now with such low inventory. Where are you going to get your house from? Well, the home builders might be the place.
Exactly. And chip stocks, how are they doing? Nvidia had a nice day today, but an inside day here for SMH after an explosive move last Friday for the chip sector, up 4%, definitely outpacing the broad market there. We also have a trend line that was cleared. And now, not only are we seeing SMH above the mid October peak, but it looks like it's now knocking on the door of the early September highs as well.
Yeah, and I believe you and Ed covered Taiwan Semiconductor TSM on Friday. That was helping SMH quite a bit. So the fact that, again, this was kind of a nothing day, right? It was inside. It's really at the top of the range. But you also mentioned NVIDIA, and I think it's important that you kind of keep in mind that NVIDIA earnings are coming up. So that's something that could, for good or bad, could leak out to the rest of this sector. So just be very
Yes.
aware of that.
Absolutely. Good point there. So, coming up next Tuesday. And let's take a look at IGV tracking the software sector, fractionally higher today. And we also have this group above the early to mid October highs coming up on the early September levels.
Yeah, and what I really want to point out here is just look at that relative strength. The relative strength of the software group. This is something that's really sticking out. Remember, this relative strength is versus the S&P 500. The line here, the number that's going to be relevant to all stocks in our database. So the line is what we're looking at here, and the S&P 500. The IGV is really beating that soundly. And to that end, we could probably talk about our first stock, Shopify, because one of the standouts in the software sector has been the computer software enterprise group. Number 43 for this group, but a lot of stocks that we've been looking at that kind of fit the bill in terms of setups are coming from this group, and Shopify has just kind of added its name into the ring. It got back above its 50-day moving average line after its earnings just a week ago. And it's now holding kind of tight. So I like the fact that it kind of came up to this level and is just holding right there above 60, because this can kind of build a platform from which it can launch. Also, they do have an investor day, or analyst day, I should say, coming up on December 5th. So that's worth jotting down in your notes as something to be aware of, because a lot of times information will come out at these analyst days. Some good questions asked by the analysts, get some answers. So that's something that's important. And also, for more information, we often do the stock of the day, and Shopify was our stock of the day today. So Reinhard Krauss did a nice article kind of wrapping up what's happening with this stock.
Yes, and it is right there in this news section. Now, not the prettiest of faces here, Justin, but we do like those shakeouts in the double bottoms and a powerful move on earnings in some volume, coupled with this reacceleration of growth here coming back to life this year and next after a little post COVID kind of hit there. I don't think it was related to COVID, but it's turning back around and producing the kind of growth that we had gotten used to in 2020 from
Yeah.
this company.
And look, it's, I'm glad you're showing the weekly here, because it's worth remembering that not too long ago, this was a stock that went all the way from almost 180 down to 2023. And so you just have to remember that no matter how great a stock is, they can all suffer big, big losses. And rather than holding through that whole thing, because look, the fact is, okay, Shopify, it's coming back. I mean, it's gone from 23 to 60, so it's well on the road to recovery. But there are so many of these stocks that just never come back. So you never want to be so married to a stock that you're like, hey, this is the greatest thing since sliced bread. And Shopify certainly fits the bill in a lot of regards there. But you never know if the stock is ever going to come back. And I always think of like Cisco and Microsoft. Cisco still has not hit the 2000 highs. From so long ago. And this is a company that everyone still uses all the time. It didn't go away, but the stock never hit those highs again. Microsoft also, it took 15 years for it to get back to its highs from 2000. And the only reason it did it was because it was able to reinvent itself with cloud computing, and now possibly again with AI. So look, there are those exceptions of stocks that do come back after these long periods of time where they don't perform. But you can't think that that's going to happen with everything.
Exactly. Yeah. Because I mean, this was a breakout. It broke out of a base here, but it did have sell signals. So hopefully, you're right, Justin. Traders were following those sell signals and not writing something like this or anything for that matter all the way down. We could be deploying our money elsewhere, something that is in an uptrend and going to have better odds of making us money than losing us money. So being on the right side of stocks, as you mentioned, is just so important. So that's why
Or
we look
even
at all
holding
these
on to
different
the
time frames.
cash, rather than deploying it. I mean, if you can reduce your drawdown and then start your next rally from a higher point, that's going to let you make a lot more progress in your account over time.
Yes. Couldn't agree more. Let's now go to DoorDash, retail internet name, breaking out of a double bottom on earnings and now going tighter here. Let's take a closer look. This wasn't a bounce off of the 21-day line, Justin. This was a bounce off of the 10-day line, but it also happened right around that gap up low and the double bottom buy point today.
I was almost going to throw this one over to you, Allie, because you brought this up in an internal discussion, and I think you were making some good points, and I was backing you up on this because yes, it is a 10-day line bounce, and that's not something we're typically looking at as an entry. But where did it come down to? Right to the top of that double bottom or double bottom entry. The 85.38 is your double bottom entry. It broke out of that on earnings. Nice volume on the way up there, and this pullback has had some pretty light volume comparatively. So I
Mhm.
think the pullback was fairly orderly. It came down to a level that you'd expect it to. Sure, it could have come down to the 50-day moving average line or the 21-day moving average line, but that actually would have looked a little worse. I think that where it came down to, I think it was nice that it got support
Yeah.
there. So I think I'm a little bit more willing to take a chance on something that's refusing to give up ground. And DoorDash actually kind of helped Uber a little bit too. When DoorDash came out with its earnings, Uber did fairly well, because it's got the Uber Eats. So I think that there's a lot to be looking at for these companies, and both of them look pretty good. Uber a little bit better, but
Mhm.
DoorDash is looking interesting as well.
Yeah. And that's the one that I'm playing here in this theme. But I think you could also see this as some sort of handle. It's not like it's been running away and has a bounce off of the 10-day line. I mean, it's, one could use their imagination there for some sort of handle.
I
But
don't even think you need that much of an imagination. I mean, you go to the weekly chart, and I think it's pretty clear. I don't think you're going out on a limb at all. This is a nice breakout, and a lot of double bottoms do form handles, and
Mhm.
this looks just like a handle to me. So
Yeah.
I don't think you're painting crazy trees here at all.
Well, I'm picking up what you're putting down, Justin.
Okay.
I'm with you. Let's now go to Lee Auto with a nice move today, up 6.8%. Volume was above average. And last week, we saw the stock gap up on earnings. I
Nope,
think it
not
was.
quite earnings. No, it was.
It
I
wasn't
think
earnings. Some
no. I
sort of
think what
news there.
happened. I think China is kind of saying, look, we're going to do some stimulus. We're gonna try and get our economy back on track. There's a lot of things that China's doing to kind of spur growth.
All right.
But
So the earnings was that ended up being the reversal day. That's right.
yeah,
That's right. It
yeah.
did reverse. And so it's pulled in a little bit. But what do you think about where it is now, Justin? Could this be setting up for another move higher? I know you and I have talked a lot about that 40 level being pretty key for this stock.
Yeah, and this is another thing that we talked about on IBD Live today, because yeah, you draw that line at 40, and you can see how It's hit its head there a number of times. What I do like about Li Auto is that, this last rally that it had, it really was kind of bucking the trend of China. Now, granted, EVs, that's kind of its own animal, so you have to kind of take that into consideration. But I still think that this is something that looks a lot better than a lot of the Chinese names. Again, the EV thing is strong, so you have to be aware of what's happening there. But this is something that has broken a downtrend. It's back above its 50-day moving average line, came down, tested it again, found support there. But now there's two questions here. The number one question, of course, is that 40 level. Can it kind of get above that? You can see the congestion there in August and September and going back further. But also, do you have the stomach for it? Look at this. This is a day where it was up almost 7%. And it doesn't look like that much, So
Yes.
if you're able to stomach 7% moves up and down because that reversal on earnings wasn't great either,
Right.
maybe this is something that can work for you. But you have to know what you're getting into. If you're not someone who can handle that much volatility and big swings, this is not the stock for you. You're just going to have to move on to something else. But
Yeah.
if
And you
you
can
can't
speak
handle
from
that,
personal experience because you were in this bucking Bronco for a
I,
nice gain at one point.
I did get a good gain out of it, but again, it's much easier once you get a cushion, right?
Yeah.
Once you get a cushion, it's a little bit easier, and it did hold that 21-day moving average line the whole way. That did kind of make it easier, but even when it came off a little bit, luckily I had sold some into strength when it really kind of changed the angle of its ascent at
Yeah.
the end there. Because otherwise, I would have been hurting a little bit on that earnings report where it came down so much.
Hmm.
They can come down very quick, very fast once they top. So you have to be very wary of that. And with a stock that's already volatile, if it comes down quick, that can be very painful.
Hmm. Justin, really quickly, what are your thoughts on some of these select China related stocks that we've been seeing bubble up on some of our screens lately? It seems like maybe there's not a chorus, but there's not a lone wolf here. There are, perhaps some regulatory risks to be aware of, or just Chinese economic risks
Yeah,
to be right to
government
be aware of
risks.
with these. Right? What are
uh,
your thoughts?
there are, and so I think a lot of times for me, what it boils down to is two things. I mean, price, trumps all, right? But number two, the relative strength. I think the relative strength will often tell you quite a bit. If these are things that are strong relative to other group mates, country mates, what have you, and even look, I'm going to be having high expectations. If you're going to get my money and get have me
Right.
take that extra risk, you've got to be already performing. So I do think
Yeah.
that there are some stocks out there. The a few that we've been talking about include Li Auto, PDD, Miniso. There are these select few that I think as a starting point, look for the ones that have remained above their 50-day moving average line and have held that line, because those are the ones that I think have been showing a little bit more strength. So that's definitely a place to start.
Okay. And if you don't want to trade these stocks, I mean, there's a lot of other stocks out
Plenty of
there,
others, and
plenty of other
ones
fish
that
in the
don't
sea.
have nearly the volatility. So hey, Microsoft. I mean, there's some big heavyweights right now that are doing just
Yeah.
fine.
Yeah. Well, thanks so much, Justin, for your analysis today. And thanks everyone for tuning in. That is it from us. But be sure to tune in tomorrow morning to IBD Live, investors.com/IBD Live for all the details. We will be breaking down the market action, stocks on the move, portfolio management strategies, and more. So we'll see you there. And we'll also see you right back here tomorrow at the close.